Welcome back to one of our episodes about investment banking. We'll talk today about the first of these services that actually are being offered in the market by a full-fledged investment bank. So what does a full-fledged investment bank offer? We talked in one of our last episodes about the different services that a full-fledged investment bank can actually offer. And one of these services that we talk about today in more specific is brokerage services, where they deal actually in public securities. The full-fledged investment bank can be a separate company, or could be acting as a big firm for each line of service that they offer. And today we'll talk about brokerage, where actually customers can buy and sell public securities, whether equity or debt. You may have come across brokerage firms where you actually have an account, you open an account, and these brokerage firms, and what you have to do is just fund the account. You don't actually have to pay to open an account. You just sign the papers and you start funding the account. Then you start buying and selling, whether you talk about stocks or we're talking about bonds. But very important to note that we talk about public equity or public debt. A brokerage firm can actually operate in the brokerage business, under two different hats, wearing two different hats. First hat is being an agent. Actually, as an agent, the brokerage firms is basically an intermediary between the client on one hand and the market on the other hand. Okay, let's visualize it to make it a bit clearer. Let's say you have the brokerage firm here, and we have on the left hand side the client. Okay, they open an account, they deposit the money, and they start dealing in the market through the brokerage firms. On the right hand side we have the market where the client trades. But on the other side of the market also, on the blind side for us as a client, we don't really see the other side. It's basically other brokerage firms dealing in the market, who they have also clients buying and selling in the market. So the agent, as an agent, the brokerage firm buys and sells stocks or bonds in the name of its customers, not in their own name. So what if they buy or sell stocks in their own names, the brokerage firm's names? We have this as a different hat. It's basically acting, we call the brokerage firms acting in principle. They actually buy and sell in their own name. And another word for this, we call they're buying under their street name, the name that they're known in the street. What kind of street is basically referring to Wall Street. So like Merrill Lynch or Goldman Sachs buying and selling stocks, you say, okay, they're buying on their own names. And usually they have a prop account or proprietary trading account that they can actually use to buy and sell stocks and bonds in their own names. Okay. Why do they do this? Why do they trade and sell or buy and take positions in different securities? Because usually they have a type of license that we call it a broker-dealer license. Okay, and they can actually sometimes also make market. They can be a market maker. They have a market maker license. These brokerage firms, what type of investment professionals work in these firms? We have, of course, since it's a brokerage firm, we have the brokers. And these brokers, they deal with the clients in terms of buying and selling stocks. And we also have the analyst. And the analyst here, we have a name for them. We call it a sell-side analyst. So those analysts or research analysts who work in brokerage firms, they're actually called sell-side analysts. They're not that because of their issuing sales recommendation, but they're basically selling the research service. We'll talk about this in more details when we talk about research as a different line of business. But simply here, the sell-side analysts are those analysts who work in a brokerage firm where they actually provide the research service to their customers, trying to stimulate trading by buying and selling in the market. Why is that? Because the brokerage firm, as any type of business, they need to make money, and the money that they make, or these brokerage firms, that the money that they make is actually called commission. In some markets, the commission here is a percentage of the turnover, how much traded stocks, the value of the stocks that they trade. And other markets, like in the US, they have it priced per share, like 6 cents per share. Thank you very much. We'll talk next time about other services in the near video. Thank you.